Hey there, Outliers. Welcome to another edition of the Trading Room. Today, we're going to be looking at a SoFi analysis video, as well as a $1,000 day trading video. Oh, this is going to get really ugly really fast. I'm telling you right now, I know where this is going, and it's going to be really ugly. We'll also look for some new trade setups. I might have some new trades today, but of course, we'll also be looking at your stock requests. So tune in to this video and let's jump right in. So this first video we're going to look at is called 21 million bullish SoFi options today. Fire emoji. New 52-week high coming for SoFi. SoFi analysis. Now, this is coming from the Trending Stocks channel, and I will give them a lot of grace because they're a smaller channel like I've been doing with, right? I don't want to punch down. I do not want to punch down. I want to see how good this analysis is. So let's jump right into it.
What's going on? Welcome back to Trending Stocks. Today we're going to talk to you about SoFi. I want to go over some of the data points, break it down, what moved it, and go over everything else you need to know. But first, make sure you guys hit that thumbs up. And with that, let's get right to it. So SoFi did go up 3.82%, 1643 the low, 1711 the high. So SoFi definitely was leading the pack in the finance sector, which largely was red today. But I think today there wasn't all that much in data points coming out. So it was more so linked to its own technicals. And SoFi definitely was fighting ever since Thursday and Friday last week to really break out. So I think a lot of that is carrying forward into this week. But as of today, with the market being closed, you have 53.5 million shares being traded. 43.1 is the average. A ton of transactions on both the secondary market and also the dark pool. So these are all the ones on the secondary market. A couple big ones, 1.9, 1.7, 21 million. And then even on the dark pool, a lot of transactions. Dark pool is often enough linked to shorts and other large transactions. So a couple big ones here. So 4.6 million and then 4.75. That was done at 1 o'clock. So a lot of big transactions regardless. But aside from all of that fun stuff, though, there was no official news from SoFi, nothing like that. A couple SEC forms. So there was two 144s that just came out after hours. Did kind of point that Eric Schupenhauer, whatever his name is, an officer, did sell 31,000 shares, as you can kind of see right here. It is for tax purposes, so nothing really crazy or something to worry about. A lot of these transactions were in a blackout period, so they had to wait until after their earnings was submitted and released in order for these for them to sell. So that's why it kind of came in as one. But you also did have right here, so Pinto, who is an officer, did sell 15,000 shares. Similarly, it was for tax purposes. So nothing really crazy if you ask me. So let me know your viewpoint on that in the comments below. Aside from that, shorts did increase 29,000 shares. So not all that much, definitely breaking from the overall trend that they've been kind of doing. So they have been slowly increasing from the low of 11.67% on February 11th. So again, they're not really doing all that much, 11.79%.
That's interesting. I hadn't ever considered looking at short interest. I'm wondering if the reason they want to look at short interest, they, not just this particular channel, but they, as in whoever looks at this, to look for short squeezes. I assume that's what they look at that for. I'm not 100% sure, but that's the first I've actually seen somebody who tracks that.
Of the free float's being shorted though, and you see cost to borrow minimum is negative, so negative 0.07%. So meaning, once again, a broker's out there physically paying people to short SoFi. So it'd be interesting to see when that will stop. I cover a lot of different stocks through many different YouTube channels. Sometimes you see this maybe like once every 6 months, occasionally on a heavily shorted stock, but I feel like it happens all the time with SoFi. So hopefully something does come from that. I know I've stated this in the past, but it'd be really kick-ass to see Anthony Noto do the same thing as Palantir's CEO and just say F the shorts. Like, I feel like that would be huge. But aside from that, looking at options, 38 million in calls, 8.81 in puts, 46% of all the options being done today.
Okay, so hear me out. I normally hate fundamentals, and I can't stand when people talk about, oh, the PE ratio is this, and the whatever is that, the EBITDA is 42, you know, who cares? But I've not heard someone come to the table talking about all of the technicals as it on all the data points that are within the trading realm like this before. I like it. I'm digging it.
We're optimistic in nature, somewhat in line with the last couple trading days for the total premiums. So today 46.6, yesterday 47.9. Of the call options that were purchased today, you see consensus for it to be above roughly around that 18 to 1850, and then the bears are anticipating for it to be sub 15. So definitely,
dude, I'm digging this. I'm digging his data points here. These are great.
a lot more upside is anticipated. So it's good to see that level of optimism. Again, I think a lot of that is stemming from the actual technicals, but with it closing at 1683, it is trading between this R2 and this R1. So 1645, which it kind of bounced off of today for the low, but that is going to be a strong support. And we know with it bouncing off of that today, that's a strong support. Flip.
So I am not a Fibonacci guy at all, like legitimately at all. Interesting that he's pointing that out. And interesting that it's not on a chart that he's pointing it out.
Side 1692 and then 1669 or 1769, sorry, those are going to be the next strong target / resistance points. No new analyst ratings, nothing like that, but like I said, today was more of a technical driven day, and because of Friday it did break past that 50-day moving average, so historically speaking that usually results in like a 30% swing. And one thing,
well, hang on, I to say that historically every time you pop open, you know what, this is a good example of investor psychology, right? Investor psychology here, because this goes back to something we were talking about last week in trading in the zone, where every trade is unique, right? And for him to say, you know, usually when it pops over the 50-day moving average, that results in a 30% gain. It's not a thing, right? It's not a thing. And where I'm going with that is you can have the exact same setup on the exact same day of the year on the exact same stock and have two completely different outcomes. Completely different, right? I mean, here's an example right here. A pop over the 50-day and a pop back under. A pop over the 50-day, a pop back under. Then a pop over the 50-day and it ran hard. And then it came back under. And then a pop back over the 50-day and it came right back down. And then pop back over, right? I don't know, that I didn't like that. But that's okay. That's okay. Keep going here.
thing that really helped SoFi kind of lead the pack for the whole finance sector was the fact that also you have algorithmic trading really working on your side, because it did break past that super trend. So as you can kind of see that green line right here, that is pointing for it to be, it is bullish. So again, you have the algos really buying up SoFi, pushing it higher. So technicals are looking like you're going to see all-time highs. As I mentioned on the weekend, I think this is where you'll probably see a new 52-week high for SoFi. But let me know your viewpoint on that. As of late, though, you do see the stochastic RSI at 80. So if it does continue on the status quo, and if it does continue to move higher tomorrow, then you could see it rather overbought. And what that ultimately means is if SoFi does have some negative kind of data point come out, or just on a larger macro standpoint, then you could see some volatility in the downside. Tomorrow, you have a couple data points. So you have building permits, starts, and also in the afternoon, FOMC minutes. And in my opinion, I think the minutes won't be all that crazy. Won't be any negative downside.
Okay, so we're gonna go ahead and stop it there. So what I want to do is I want to give you my perspective on SoFi. So first, you've got your 10, 20, 50 that crossed up a while ago, created an incredible trend right here. The first time that it closed under the 10 was right here. And as you know, a close under the 10 for me is an exit sign. And what happened right after that? A lot of sideways trading, Yes, it did hit a new high right here, new 52-week high, but it ran right up into that order block, right? Soon to be outlier blocks. I'm going to put that out in the universe. We're soon to be going to call these outlier blocks. Just wait. So it ran up into this outlier block right here. And then what happened? You had earnings down 17 whatever percent after that. I could have told you, and I believe I did, if you want to go back and watch the videos, I said, watch this area right here. Boom, monkey hand. Hang on. Watch this area right here. Boom. Monkey hammered. I had to throw that GIF in there. Now, it drifted sideways here. You had your 10, 20, 50 cross down again. So this technically was a bearish trend right here. But this is what happens at stage 3. What is stage 3? Let me show you what I mean. Stage 3 is this right here. Your stage 2, or your stage 1 is at the bottom, consolidation. Stage 2 is where it runs up. Stage 3 is where the moving averages cross back and forth. Stage 4 is where it moves down. What do you see happening right here? Moving averages crossing back and forth. What did you see on this side? That's a stage 2, right? It's playing out. It's playing out right here in front of you, right? Now, I don't know if it's going to hit a stage 4 and come back down. It may, but right now, this is a sideways trend. I wouldn't buy it with your money. But one thing to note is that it did have this move up into this order block here. So I'm going to teach you exactly how I would have traded out of that order block. Now, who am I? Well, I know I'm just some random guy on the internet, but my name is Christopher Ewell. If I can find the slide. There it is right there. My name is Christopher Ewell. I've twice been awarded top 100 people in finance. I was mentored by 5 of the market wizards, the best traders of all time. I've been successfully trading since 2009, and this is where we save time, make money, and start winning with less risk together as a team. Now, of course, I want you to rank this video. Go ahead and throw your ranking and subscribe if you haven't done so already. But go ahead and throw your ranking in the chat as I'm explaining how I would have traded out of SoFi. If I had gotten into here, which I know I wouldn't have, but if I had gotten up into here, I have this rule set right here. Now, if it comes up to the order block, the outlier block, I should say, if it comes up to the outlier block, this is a big red flag. This says, hey, you know what? Your profits, enjoy them because they might get, stomped right back down. So I would switch this to the 5-minute chart. Okay. I've already marked on the chart where that order block is, the red line. Okay. And then you're going to love this. You're going to love this. This is going to change your life. Your 10 moving average and your 20 moving average on the 5-minute chart. Okay. If both of those are going up and they don't cross back over, then you can hold it. If both of those go up and then cross back under, that's where I would exit. Do you see the difference right there? No crossover, crossover. That's your 10 and your 20, your short term and your intermediate term. Now, why would I have done that? Well, if these had crossed over, I would have got out like literally right at the beginning of that order block. Okay. If I had gotten out right at the beginning of that order block, then that would have saved me about 2.7% on the trade. That's how I would have gotten out of it. Now there's another one, SMCI, which is a great example today. A great example of an order block. Okay. So you're going to absolutely love this. Watch this. So SMCI had this 111% move from an outlier signal, right? In fact, let me go to this outlier signal real quick. SMCI, and you'll see what I'm talking about here. I know someone in the chat was talking about their SMCI trade and how they've been killing it. I could have helped you kill a little bit more. Could have helped you kill a little bit more. So let's go to like a 6-month view. And we'll see this buy signal right here on January 27th is this, right? So this 111% move. Now, it came up into this order block, right? Yeah. Came up into this order block right here. I'm going to remove remove just this one here. Came up into this order block. And during the day, what happened, right? Came up into this order block. This is on the 5-minute chart. And look, do you see the difference here? Where there's no crossovers, you can let it run. You can let it run all day until the crossover. You can just set an alert, right? Where on any broker platform, whatever, or if you want to just pull up your monitor, keep it off to the side, something like that. I mean, look at it drop at the moment, right? You could have saved right now 11%. Holy moly. Yeah, that's how I would have traded it. And I know that's how I would have traded it because I got rules and they're multiplying. Okay. So do you see the difference here in running up an order block and letting it run during the day and then getting out versus a stock coming up into the order block, immediately getting rejected and then coming back down? Tell me in the chat if you like that. Throw a B, a letter B in the chat if that outlier block description, if that outlier block strategy right there was useful to you. Throw a B in the chat. I see lots of Versace says yes. Our order block's available in Outlier. They're coming. They are coming. Right? What movie is that? The Lord of the Rings, where all the goblins are coming, and Gandalf says they are coming. You know what I'm talking about? Where Pippin pushes the orc down the well, and it makes all the noise in the cave or in Balin's tomb, and then Gandalf turns around. He goes, "Full of a toque, they are coming." All right, just let me know. Dr. J with the monkey hammer. Dang it, Nathan. Nathan, you're just like trolling me. I know. I know that you know there are no 7s, especially no 7.7s. No, sir. Yeah, SMCI is getting round trip today. So like I said, throw a B in the chat if this was helpful to you. I like the price technical analysis 8. Oh, hey, Michael, how you been, dude? Chart is pixelated, low quality. That's what I'm here for, dude, to make everything pixelated and low quality for you. Sorry. Which software are you using to see the order blocks? Currently, it's TrendSpider. They are coming to Outlier soon. Okay, lots of Bs, lots and lots of Bs. Very cool. And a BE. Very cool. Glad to help everybody with that. All right, now let's go to the second video here. This one I'm going to cringe really, really hard. Okay, I know I am. Let me preface this by saying this channel, Investing with Brandon, I just found out about it today, thanks to someone's suggestion in fact, who was that? Q&A video ideas. Who sent this one? Who sent this one? I want to give you credit here. Bjorn sent me this one. Yeah, this one is let me tell you. Okay. Here's the deal. He's going to talk about selling options. Before this video starts, I want you to think about there's two different events. One, long-term capital management. If you aren't familiar with it, Google LTCM blow up. One of the biggest financial blowups of all times. Second, I want you to Google up natural gas blow up. Oh, maybe that one won't work. Natural gas hang on, I'm gonna Google for you. Natural gas ETF blow up. Oh, that's gonna be a hard one to find. There was if you know what it is in the chat, tell me. There was a natural gas like hedge fund blow up. This one. No, this is in 2024. This was a little bit further ago. Yeah, long-term capital management. Anyway, Google, is it this one? Okay, I don't know what the name of it is off the top of my head, but there was a hedge fund that blew up doing exactly what he's talking about here. There was long-term capital management that blew up doing exactly what he talked about here. This is equivalent to picking nickels up in front of a steamroller, okay? Now, I have experience to talk about this because this dude lost $200,000 thinking that I was a genius, thinking that I was doing this, and somehow I was the one person in the whole world that couldn't make selling put options work. I'm going to break it down in as much detail as possible. This is the kind of stuff that I fell for. I don't want you to fall for. So investing with Brandon, my friend, please accept this as constructive criticism. Certainly don't want to have any personal attacks on you, but I think selling put options is probably the most risky thing you can possibly do in the market.
Doing stock options. Right now I scaled that to roughly $1,000 per day, so $30,000 per month. So in this video right here, I'm going to break down exactly how I do stock options and how you could do this right now to scale your portfolio. If I can make $10 a day, why could I not make $100 a day and then $1,000 a day? And then eventually I plan to scale this to $10,000 per day. $969,000 is what I grew this account to in just a few years. You can see my 2-year return is $602,000. So it's been going really great. But honestly, once you have a good option trading strategy, you know how to manage risk, and you really know how to do this stuff in a low risk way, you will scale your portfolio just like this too. So we're going to look at these two trades right here on NVIDIA. They're two very different strategies, but they're both bullish strategies. So when you want to make a trade on something, you have to understand, am I bullish or bearish on this stock? Do I expect the stock to go up going into the future? Because you don't want to go make an options trade where you want the stock price to go up and then it actually goes down. You're going to lose money on that trade right here. So if we look at NVIDIA right here on a 1-month chart, you can see it was up here around $147 per share. And then it took this really big dip down here to about 118 bucks per share. There was rumors coming out that they weren't going to need as many NVIDIA chips. So that's why the stock got hit super.
Okay. Let's just go over here real quick. So here's was that where it got hit? Oh, this is on a 5-minute chart. Here's where it got hit. Okay. Just for context.
Super hard. But when you understand how NVIDIA works and how the AI field is actually evolving, you would know that this is a dip buying opportunity right here. And that is exactly what I did. So I bought.
Oh, okay. That was my first cringe. Whew. There's never a dip buying opportunity. For the rest of your life, there's never a dip buying opportunity. Not ever once. Okay. Did it recover? Yes. Maybe. It's still sideways. Please don't dip buy anything. I see a lot of chatter on Palantir. By the way, we got a sell signal on Palantir a couple of days ago. Just putting that out there. Okay, let's get back to this.
Bought calls and I sold puts. The one strategy is basically like swinging for home runs, but the other strategy is swinging for base hits. I like to do both strategies because some strategies you just get monthly cash flow every single month, but some strategies you could go in 5 or even 10 extra money on them. So that's what we're going to break down right here on these two NVIDIA plays that I made. Another reason why I picked NVIDIA just beyond this dip right here is because I felt like the stock was trading near its true intrinsic value up here in the 145 range right here. So when it went down to 118, I knew that it was on sale. Intrinsic value.
Oh, I don't know if I can get through this video. I'm cringing really hard. And I don't want to be ugly to Brandon. I don't.
It's just what do I really feel like the stock is actually worth, and they're growing earnings like crazy. I feel like the company is going to be way more important going into the future. There's just a handful of reasons why I want to own a company like Nvidia. So I made those 2 option trades. So we're going to look at the one first right here, which is swinging for the home run. So right here, you can see I bought a 125 call on Nvidia. So as you can see right here, Nvidia is 138 bucks per share. So if you want to go buy the shares right now in the open market, 100.
I wonder, would he have made the same video if he weren't up on the trade? I doubt it. Right. It wouldn't be like me, who shows up every day, does it live, full transparency.
38 bucks per share. But with the option trade that I did right here, you got to think about it. I could go buy these shares for $125 per share anytime between right now and 1/15 of 2027. So what do you think Nvidia price is going to do in roughly 2 years from right now? This is allowing me to buy for 125 bucks per share. It's already at 138 bucks per share. It did a pretty quick rebound. I got into this trade somewhere around the 120 level, so I'm up roughly $18 per share since I went into it. But remember, I bought the options contract. So you can see right here, I bought it for $37,000. Now it's
And I love buying options. This I'm good with. I really don't like his, it's a dip buying opportunity. I really don't like it. I think my spidey sense says it should be 145, right? I really don't like that. There are no shoulds in the financial markets. But he hasn't talked about selling puts yet, so I can get behind the buying the calls. I can get behind that.
it's worth $48,000, and that's where you have the $10,000 profit right here. So this is a play right here where you're swinging for the home run, but I want to show you that these two work together, and it's very key to understand both. So I'm swinging for the home run right here, and another really important thing about this trade before we go into the cash flow trade right here, where I get roughly $1,000 a day, you have to understand that this trade
No, you don't.
right here is roughly 5% of my portfolio. So you don't want to go too hard on any certain trade, because just face it, things happen in the market. It's not always going to play out exactly how you think it's going to play out. So you don't want to have all your eggs in one basket. But when I do make a trade, I want to have a very high margin of safety, and I want to have a lot of conviction in that trade before I go and do it. So this is a play right here where I'm swinging for the home run. And basically, if Nvidia goes at $300 per share by 1/15 of 2027, in theory, this contract's going to be worth $300,000, and I could buy 1,000 shares for $125 per share, even though they might be worth.
Well, listen, if we're going to throw theory around, right, it could absolutely be 300. It could also be 139.82 like it is right now, right? If that's what we're throwing around here, come on.
$300 per share. So I could then take those 1,000 shares and go sell them for $300,000, and I'll make that profit. It's going to be a really fat profit on that trade. That's what I expect to happen. Of course, it's not guaranteed, but that is a swinging for home run play right there. So now we have to go into the play where I generate thousands of dollars per month, roughly $1,000 a day in options cash flow. And like I said before,
okay, so I can get on with the buying the calls. I will never buy calls in a dip. You couldn't force me to buy calls in a dip. But to sell puts, I think is irresponsible. I think there is a very insidious nature. I'll show you what I mean in just a minute. A very insidious nature with put selling that completely destroys people, and it's what happened to me.
I remember when I started out, I was making $10 a day maximum, but I was super excited to make that first $10, and I knew if I can make $10 per day, what is stopping me from making $100 per day? If I can make $100 per day, what is stopping me from making $1,000 a day? That is the scale of how this strategy works. If you could do it consistently year after year after year, your trades will scale as your portfolio scales. So that's why I started selling puts quite a bit. Now, there's a couple things you have to know before you just want to go and sell puts. You have to do it on a company that you feel like is trading cheap. So that's why I sold a put on Nvidia after this dip, because I thought it was cheap at the 147 price level here. But once it dipped down to 116 bucks per share, I knew that it was even cheap.
Okay. Hang on. Let's look at what's a stock that everyone thinks is selling for cheap right now? Oh, AMD. AMD is a great stock that everybody thinks is cheap right now. And how's that worked out at 150, 40, 30, 20, and 10, right? And it may be making a comeback.
Cheaper, and I knew that there was fear in the market, and I like to be bullish when there's fear in the market on companies that I'm already bullish on. You want to be fearful when other people are greedy, and you want to be greedy when other people are fearful. That's what Warren Buffett says all the time.
Right. But you also need to keep in mind how trends work. And if people are selling off, where's it at? If people are selling off, selling begets selling, buying begets buying, right? A stock moving in one direction is more likely to continue in that direction. And then only once a change in sentiment comes through do things turn around.
So I was being greedy on this dip right here when everybody else was being fearful. So what I did was I sold a put right here. That's why you see this negative number right here, because I sold the put. Now what happens is I collected $21,000 in premium to my account immediately. So what is...
Okay. Don't get stoked on that. Yes, you're collecting $21,000 up front, right? Because you're selling the premium. It's like you are the insurance company. You take in the premium from somebody who bought insurance from you. Okay. Now, if the price of that goes down, you now are on the hook for all of that and potentially so much more, right? Like, for example, if your insurance contract is $500 a year, now I know that's impossible these days, but let's say your car insurance contract is $500 a year and you go out and you crash your car. Well, they'll pay for your new car and they'll also pay for your liability, right? Maybe not your new car, maybe $15,000 worth, right? And they'll also pay for liability of your property damage, your medical damage, etc. So your $500 just basically gave you, let's say, $500,000 of coverage and all these different things that it could buy, right? So for the insurance company, that is a tremendous loss for a tiny bit of premium. And for the insurance company, they understand the risk they're taking because they have buttloads of people in their pool, right? They have an insurance pool that they draw from to pay for it. You aren't that insurance company, my friend. Unless you have 50,000 puts that you're selling across all these different stocks, the one that goes sideways, that's going to be a big problem.
This premium is just the instant cash flow that I get by selling somebody this put contract. So then when
please do not call this instant cash flow. You and I both know that you're going to lose on one of these trades and that instant cash flow will evaporate. That's not your money.
Did was I took part of this cash flow right here and used it to buy these call options right here on Nvidia.
No, he didn't. Oh. Do you guys remember a couple years ago where there was the infinite money glitch within Robinhood? It was that. It was exactly that. It was you could sell options and then take the money you bought, or I'm sorry, the money you sold them for, and then turn around and buy more options with that. That was the infinite money glitch. I thought they locked that down. I thought that was an impossible thing to do now. Yo, I like leverage, but you just leveraged to the tits on that, my friend. Holy moly.
Nvidia. Now I get it, I only got $21,000 in premium here, but I took most of that and I used that to go buy these call options on Nvidia right here.
You shouldn't be able to do this. His broker is broken right now. You should not be able to do this.
So I'm basically getting these call options over half off. Basically, my cost basis, if this expires out of the money, is pretty much going to be like $26,000. So what does this mean? How does this option play work out? Let's look at it. So my strike price is $100. The expiration date is 6/18 of 2026. So this is the key that you have to understand. And it all comes back to the valuation of the company. Do we feel like Nvidia was cheap at $147 per share? I thought it was. So I was willing to sell a put option then, but I waited and I caught this.
I almost wish I hadn't pulled this up because this is bad. This is horrible.
Dip right here. So when I sold the put, it was roughly $120 per share, like I said earlier. So I got it at a discounted price level. So if I felt like Nvidia was cheap up here at $147 per share, I felt like it was even cheaper down here in the $118 to $120 range. So when it was roughly $120 per share, that is when I sold these puts on Nvidia. So what this trade actually means right here is if Nvidia falls to $100 per share anytime between right now and 6/18 of 2026, I'm going to have to go buy shares of Nvidia for $100 per share. But think about it real quick. If I felt like it was on sale at $147, and then I sold the put when it was roughly $120 per share, so it's even cheaper than before, why on earth would I not want to buy it for $100 per share, roughly a year and a half out from right now? They're going to have more time to boost their revenue, more time to boost their earnings, more time to make the actual company worth more money. So that's why there's a high likelihood that the share price is going to be well above $100 per share. So that's why I took the premium when I sold this put and I rolled it into this call right here. I do it on many different other companies. You can see I have a few other companies open up right here. And this is only accurate to the time of recording this video. But in a nutshell, that's what I do. When I'm bullish on something, I'll sell a put and take the premiums and go buy the calls.
You shouldn't be able to do that. This is almost a financial crime right here. And I don't mean like in the sense of like, oh, it's a finance crime. No, like legitimately a crime. Like he's basically stealing money from the puts that he sold to go buy more call options I don't know how he's doing this, but I'll tell you one thing. Do not even consider doing that. This is so much worse than I thought it was going to be. Like, my heart is racing right now because he has no idea the amount of risk that he just put on. If Nvidia drops, he is bankrupt. Oh my gosh. Like, when I used to sell puts, the broker was smart enough to say, okay, you need to put up 20% of I don't understand how he's doing this. No, I'm not. Tim, I'm not. You don't understand. I'm not. I'm not exaggerating for this. Basically, what he's saying is that rather than his broker taking away buying power, the broker is giving him additional buying power to go out and buy more puts. If I'm understanding what he's talking about correctly, Brian's right. Maybe he is using an international broker. I don't know. But this should not be possible. This is exactly how Robinhood messed up a buttload of people, because Robinhood was doing exactly this. You sell a put, you get the cash in your account. Now you can take that cash and go buy more stuff. Something's not adding up here. Something does not add up here at all. I don't know if he's making this up. I don't know. But whatever you do, do not do this. My score is a negative 14 million. I've never seen anything worse in my life. Call me exaggeration. Call me Exaggeration Larry. Okay, that's my new name, Exaggeration Larry. But don't you dare ever do what this is. Do not ever do what he's just talking about there. Investing with Brandon, my friend, I don't think you have any idea the sort of house of cards that you've built here. I'm really nervous about this. Like, ultimately nervous about you, or about this for you. It's like a company going to the casino with their retirement fund. Yeah. Okay. So and of course you can sell puts and you can buy calls, right? You can do that all day long. But what he's saying is selling puts and then taking the money he got from selling those puts, which is the winning part of the trade, which he doesn't own until the trade is closed, and then buying more. This is what he said, right? That's what he said. I don't know, but goodness gravy. Okay, so let's talk about why selling puts is a horrible, horrible, horrible idea. So we're talking about SoFi. So I pulled this one up earlier. And let me clear a couple things here. I'll try to make this as big as possible. So imagine that you are bullish on SoFi, right? You think SoFi can't go down from here, right? SoFi's been dipping, but I am a genius and I know that it has to go up from here. So you can say, I'm so smart. I am going to sell the 15 calls, right? I'll sell the 15 calls because there's like no chance it's ever going to go below 15, okay? Now, when you do that, this is actually pretty cool. Inside of Tradier, you can go over here to send a what if, and it'll show you what this trade looks like. So the current price is at 16.23. It can go down to 14.53 and you'll still break even on this trade. That's exciting. But the problem here is that the most you can earn is $47. The most you can lose, we don't even know. Okay? And then maybe you're like, well, I'll just be a genius here and I'll sell $1 wide spreads. I'll be $1 wide spreads. $1 wide spread Larry. Send this to what if. Now, the most you could make here is $23.50. The most you could lose here is $76. So that means for every $76 that you put into this, the most you can make is 23 over 76. So 30% return. I mean, that sounds pretty great, right? But what if you lose, right? Now on this particular trade, if you lose, and this is an at the money spread basically, if you lose, it's going to take you three trades to make up for the one loss. So you're like, oh, you know what? No big deal. I know what to do. I'll go further out of the money. So rather being at the money, I'm going to go, I'll go to the 13 and I'll sell a 13-12 spread. Okay. So you're like, gotta win on this. That's going to be so easy. Send a what if. Now, the most I can make on this trade is $5 entire dollars. People do this, by the way. $5 entire dollars. But the most I can lose on this is $95. Well, wait a minute here. So if I'm wrong, 95 divided by 5, I need 19 trades. I need 19 trades to break even on one trade going wrong. Right? This is what happened to me. I had 83% win rates, but I would win so little and I would lose so much that it would take me like 10 trades in a row, perfectly executed, to get back to break even. This is why I tell you, there is no reason in the world to sell puts. They are not cash generating assets. No, sir. They are a giant liability that I wouldn't buy this with your money. No way. And I don't know if what he's saying is true. And like I say, you can sell puts, you can buy calls, but if you are taking money from the puts you sold to buy calls, that feels like a crime to me because you don't own that money on those puts until the trade is closed. But clearly he knows more than I do. He's making $1,000 a day. And so, I'm the stupid one here. Lars, I know exactly. Now, I don't know if he's telling the truth, right? I don't know, but it's really, really, really bad advice. Like unbelievably bad. So with all that out of the way, he's going to learn all about this. He's going to learn all about that at some point. Let's go to today's member highlight real quick. Let's shift gears here. All right, couple spots I wanted to talk about. First, thank you, Bjorn, for sending that over. Really great video. I hate to take such a big stance on a small channel like that, investing with Brandon, but bro, what you're doing is risky AF. There was a question in here. Not that question. Outlier scanner. Are the Outlier scanner results listed in any particular order? So if you go to the watch list, it's listed here with all the buy signals today, and most recent to oldest, right? So these are all February 19th, my 39th birthday, and then they're listed alphabetically. So by date, by alphabetical. And then you go into market breadth, not market breadth, the screener, and it's the same thing here. February 19th, and then, so by date, by name. So that's how they're listed there. That's a good question. A couple other things I wanted to point out real quick. There was this question here about the difference between a 90 delta call and an 80 delta call. Honestly, there's not that much difference, but you're going to be paying more. So let's break that down. Let's go to something with more liquidity though. Let's go with like NVIDIA. So a 90 delta versus an 80 delta, right? So if I go like to the 80 delta, is going to be right here. 90 delta is going to be right here. There we go. In theory, you'll make $10 more for every $1 change in the stock. Okay, and that's one lots, right? So for every $1 the stock moves, the delta is the associated value of it for that option. So an 80 delta means that for every $1 change in the option, you'll have 80 cents. I'm sorry, $1 change in the underlying, you'll have 80 cents on the option. Okay. Now, if you go up to the 90, it'd be for every $1 change in the stock, you'd have a 90-cent change in the option. But to do that, I'm going to spend, $20 a contract versus $32 a contract for just those 10 extra cents. So for me, the risk to return there doesn't make sense because you're paying more, a lot more in this case, like 50-ish, more than 50% more to get this much more leverage. So I don't know where the diminishing returns point is, but that's my answer to that. It doesn't make sense financially to pull that on. And then I saw one other one that I wanted to talk about in the share your big wins. Where's it at? There it is. I know I saw a gold star in there somewhere. Here. This is Danish dude, 2025. Lots of gentle monkey hammers, but then discover random outlier video with Chris on YouTube and realize that only price pays. Bought a 1-year sub, sold all his bags, including the advanced money destroyer AMD. Today with new insights and a new portfolio, he gained 1,100 DKR. I guess that's Danish krona. I'm not 100% sure on that. He gained 11,000 of that. It's approximately 1,500 US dollars. So buy and hold, buy the dips. No way. Only price pays. I thought that was pretty dang cool. So, of course, be sure to share your stories in the Discord and tell everybody you know about Outlier. We're doing our very best to change the world one video at a time. So do me a favor, hit that like button. Now back to trading in the Outlier trading room. Real quick, what is Outlier and how does it work? Well, old Uncle Warren would say, be fearful when others are greedy and greedy when others are fearful, but do go with the trend. Outlier shows you how investors are acting irrationally fearful or greedy and by how much, allowing you to get into the stock before the Outlier move happens. And you can get in actually back at the 64% off discount. Mahesh, we had a conversation this morning and he said, Chris, we're just going to throw it for $299 for now. We don't know when the end date's going to be of that, but we want everybody to get in the annual pass for just $299. So that's literally saving 64%. If you have a monthly trial, you can upgrade. Just shoot us an email. We'll take care of the rest. So my style of trading is the golden ticket trading strategy where only price pays. And it starts with the market. Let the market tell you which direction it's going. So let's go to SPY. We can see here, we have the 10 over the 20, price over the 50, new all-time highs here. That's exciting. And go to the next page here, market breadth. Now, market breadth actually ticked up today, if you can believe it. We may have hit the low on this market breadth cycle right here. And it is starting to tick up a little bit. So this is the 10-day moving average of the market breadth. Market breadth measures how many stocks we have with buy signals versus how many stocks we have with sell signals. And today, first day in a while, we started to have more buy signals than sell signals. But this isn't quite crossed over yet. Once this does cross over, I'm interested in putting on trades, but keep in mind the SPY has a sell signal. So what we see here is the SPY signal is at a sell. The market trend is still bullish. Market breadth is still bearish right now. Sector breadth, I'm not even looking at. So for me, the master key is locked up. But yeah, I know. Maybe Chris will do some trade soon. I might. But you know what? I can sit in cash as long as it takes, as my mentor would say, Mark Minervini, wait in cash for proper setups. How long? As long as it takes. There's no rush to this, right? When I'm in the market, you're going to be like blown away, legitimately blown away at how effortless trading can go. And like, it's not an understatement. So I want to do two things. I want to look at Palantir because everybody's talking about Palantir in the chat. And then I want you to put in the chat, what stocks you want us to take a look at. I won't be able to take a look at all of them, but I'll do my very best to take a look as many as possible. We talked about SoFi. We talked about SMCI. Palantir seems to be a big one today, down 12%. This is going to be cool. You're going to love this. So where's my Palantir one? Okay, so we got the sell signal back on February 13th. Sell signal came on the 13th. Okay. The buy signal came December 24th. Here. So a couple spots I marked on the chart. Let's remove this one. Oh, that's right. I went through and talked about how if you're just using one moving average, how you can like have crazy results and keep your risk extremely small. Okay, so buy signal came here, and you know what? It didn't work out all that great. If I had been trading it, I would have got stopped out for a couple of dollar loss, right? From here to here, maybe. So a $5 loss, it happens, no big deal. But it closed under the 20 here. When it closed back over the 10 and 20, and they crossed back up, you could have looked at this like another buy signal, right? If it didn't work out here and you still love Palantir, you could continue to watch the market, let it tell you which direction it's going. And then this could have been a second buy signal for you here. So let's say, for example, that you did. I'm not saying you did. I'm not saying I did. But let's say, for example, if you did. That would have been a 54% gain in the span of 16 days. Now, you would have traded through earnings, which I really don't like to do. I don't know why that circle is there. But giant move right there. So if you had followed the outlier signals on Palantir, February 13th, would have got you out before this big move down. Now, if it closes under the 10, that is an exit signal to me. If you followed Palantir all the way up, where's this at? Close under the 10 is an exit signal to me. It hasn't closed under the 10 since way back here, January 17th. So do with that what you may, but I know a lot of people are talking about it. All right, we're going to do 5. I'm going to pick them at random. Affirm, AFRN. So this is number 1, AFRN. Oh, cool. So you got your 10, 20, 50, all pointing north. You've already passed earnings. I like that. Let's go and see AFRM. We don't cover AFRM? Hang on. Oh, yeah, we do. Okay. No, we don't. We don't cover AFRM, but that's okay. Same thing here. You can let it run as far as it can. Listen, you're never going to pick the top. You're never going to pick the bottom, and just be okay with that. Right? You could follow the 10 moving average. Let that be your trailing stop. And if it closes under there, maybe that's a time to bounce out. But Affirm right now, that looks sharp. Also, don't be scared. One red candle does not mean your trend is over, right? But a close under the 10 means the short-term trend is bending. Nico wants to look at OPFI. Okay, OPFI doesn't look great. So this is our first close under the 10. Right? Do we see why a close under the 10 is a great place to get out, right? Of course, you didn't hit the top, and that's okay, right? No one's ever going to hit the top. 17% down from there is pretty rough, but it would have saved you another 19% additional if you had gotten out on that side. Now, 10, 20, 50 is not crossed down to be bearish just yet. We do have earnings here in about a week or so. Let's go to OPFI on here. OPFI. We don't cover that one either. That's okay. We cover 2,500 stocks, but not all of them we cover. Adam wants to look at Microsoft, MSFT. This is number 3 of 5. Microsoft. So I had a big sell-off here after earnings, it looks like. It's going to cross over the 10 today at the close. It might. Your 10, 20, 50 is all crossed and pointing south. Let's look at Microsoft on here. So all of this looks pretty bearish to me. I want to look at a couple spots on here. First, I want to look at the fear and greed. Right? If we look at the fear and greed, zoom this in. We can see fear is still continuing to grow right there. With fear continuing to grow, being underneath these moving averages, I wouldn't be owning Microsoft. And let's go last one, ACHR. Ah, look at that. 10, 20, 50, all across north. Now, this is definitely very sideways here. This might be a stage 3, right? We talked about how the stage 3 is where the moving averages start crossing over, start compressing. And if I zoom out, because I don't know this stock, what do you know? What do you know? Like, this is what you look for, right? It doesn't take a rocket scientist, right? This is stage 1 over here. Stage 1. Stage 2 is this big uptrend where the moving averages spread apart. Stage 2. Stage 3 is where they start to come together. Stage 3. Now, it may continue on. It may. But there's also a chance where stage 4 could start soon. So for me personally, I wouldn't love this one. Do we cover ACHR? Oh yeah, we do, for sure. We did get a buy signal. We did get a buy signal on February 11th. Right there. So it's up a little bit since that point. A little bit, 8%. That's not too bad. And then you can see the greed is continuing to grow in this stock. Now, I would want to point out that in the industrials, the greed is actually evaporating and fear is starting to come in on all the other parts of the industrials. But here, the greed is definitely still coming in ACHR, whereas the rest of the industrials is getting weaker. So ACHR looks pretty sharp, but of course, for me, I wouldn't put on any trades right now because I don't have my master key unlocked. But let me see in the chat if there's anything else going on. Richard said, I traded during earnings and he made a buttload of money. That's awesome, dude. Of course, that can definitely happen, but just keep in mind, whenever I look to trade into earnings, I want to make sure that I've got a lot of profit buffer ahead because it can absolutely go the other direction. We all know that it can. Well, no trade setup for me today, but that's all right. Tell me what you're trading in the chat. And of course, be sure to come back tomorrow where we'll help you save time, make money, and start winning with less risk together as a team. YouTube is going to pop up a couple recommended videos. I recommend you click one of them. I also recommend you have a fantastic day.